You have $100,000. It's a solid amount, not life-changing, but definitely enough to make a difference. So here's the question. What happens if you invest it? Not in crypto, not in meme stocks, but in something safe, steady, and proven, like Fidelity's index funds. In this video, I'm going to walk you and John through exactly what a $100,000 investment can really do inside the top 5 of Fidelity's index funds. Ranked from number 5 all the way up to number 1 based on total value added. One of these index funds pays over $20,000 in monthly dividend income. And in the end, I'll show you an index fund that can turn a $100,000 investment into almost $10 million over the long run. But first, here's the reality check. In 2025, median earnings for men reached $71,090, while women earned $57,520, a gap that has narrowed over time but still remains significant. Yet despite higher nominal wages, the real value of money continues to decline. Prices in key areas like housing, food, and energy have climbed more than 20% in recent years, while income growth has lagged behind. After covering basic expenses, many households are left with little to save, and inflation quietly erodes whatever remains. That means keeping money in a bank account isn't just unproductive, it's losing value. To protect purchasing power, investing is essential. Index funds make that simple. They let your money grow with the entire U.S. economy across hundreds, even thousands of companies. So let's take that $100,000 and see what happens when you put it to work. Starting at number 5 with one of the most trusted and time-tested funds in America, we have the Fidelity 500 Index Fund with the ticker symbol FXAIX. This is where most long-term investors begin, and for good reason. It's built on the simplest, most time-tested idea in investing. Own the best of corporate America and let time do the heavy lifting. When you buy FXAIX, you're buying into the 500 largest publicly traded companies in the United States, the businesses that power the economy every single day. It doesn't try to beat the market, it is the market, and that's exactly why it works. Right now, FXAIX manages over $722 billion in assets, making it one of the biggest mutual funds on the planet. It owns 508 stocks spread across nearly every sector, about 35% in tech, 13.6% in financials, 10% in consumer cyclical, 9% in healthcare, and the rest in energy, industrials, utilities, and real estate. So when one part of the economy slows down, another usually picks up, and that balance is what keeps the fund steady long-term. Its top 10 holdings make up about 37.83% of the total fund, led by Nvidia, Microsoft, Apple, and Amazon. These are the backbone of modern economic growth, supported by hundreds of smaller, reliable performers underneath. FXAIX is also one of the most efficient funds out there. Its expense ratio is just 0.02%, which means you pay only 2 cents a year for every $100 invested. And with a turnover rate of just 3%, it means Fidelity barely trades the stocks inside the fund. They mostly just hold them. Less trading means fewer costs and more of your money staying invested and growing in the background. Over the past 5 years, FXAIX has returned about 100.86%, basically doubling investors' money despite inflation, recessions, and rising interest rates. Its share price sits around $234.14, with normal dips here and there, but always trending higher over time. That's the S&P 500 doing what it does best. Volatility is part of the story. FXAIX rises and falls with the broader market, especially giving its heavy exposure to technology. But that same exposure to AI, cloud computing, and digital transformation is what's fueled its strength over the last decade. Now, in terms of income, FXAIX isn't designed to distribute large dividend checks. It currently yields 1.13%, or about $2.65 per share per year. Also, these dividends have been growing at about 3.32% annually. But the real star here is the 12.77% yearly share price appreciation. So what does that look like in real numbers? What happens when John invests $100,000 into FXAIX? After the first year, his portfolio will be valued at around $113,900. After 10 years, it's projected to grow to about $355,482. By year 20, that balance will be around $1,211,937, and by year 30, the same $100,000 investment is projected to grow to approximately $4,068,126. That's nearly $4 million in total value, with around $3.91 million coming purely from capital appreciation and about $50,315 from reinvested dividends. By that point, John's yearly dividends would total about $2,290, small on the surface, but built on a portfolio that's grown nearly 40 times larger. But what if you and John could take that same $100,000 and expand your reach beyond the S&P 500 across every single company in the U.S. market and do it with zero fees? That's exactly what the Fidelity Zero Total Market Index Fund, or FZROX, offers. Unlike FXAIX, which only includes the 500 largest companies in the U.S., FZROX holds thousands, from massive tech giants like Nvidia, Microsoft, and Apple, to mid-sized and smaller businesses driving growth of the entire nation. It's not just a slice of the market, it's the whole thing, neatly wrapped into one fund. And FZROX charges zero fees. Its expense ratio is a true 0.00%, meaning Fidelity doesn't take a single cent in management costs. Every dollar you invest stays in your portfolio, compounding year after year without friction. That is rare, even in the world of low-cost index funds, and it's a huge reason why FZROX has become so popular among long-term investors. Inside FZROX are roughly 2,578 holdings, ranging from tech giants to mid-sized innovators and smaller companies with room to grow. The top 10 holdings make up about 33.23% of the fund, which gives it stability from the big names and extra upside from the rest. It's automatically rebalanced to reflect changes in the U.S. economy, so as industries evolve, your investment naturally adjusts along with it. Performance-wise, FZROX has delivered around plus 96.33% over the past 5 years, just slightly behind the S&P 500. But remember, it isn't built to mirror one segment of the market, it's built to reflect the entire thing. When large cap growth slows down, mid and small caps often step up to fill the gap. That's how it captures a more complete picture of U.S. economic growth. The current share price hovers around $23.52, making it easy for just about anyone to get started. You don't need thousands of dollars. Even a small investment buys you exposure to almost every major company in the country. With a turnover rate of just 2%, Fidelity keeps it simple and hands-off. That means they rarely trade the stocks inside the fund, which helps keep costs low and your money focused on long-term compounding. In terms of risk, FZROX behaves much like the S&P 500, but with slightly higher volatility due to smaller companies in the mix. That extra movement often becomes an advantage during expansions when mid and small caps grow faster than large ones. For long-term investors, that volatility is an opportunity in disguise. When it comes to income, FZROX offers a 1% dividend yield with an impressive 7.55% annualized dividend growth rate over the past 5 years. The payouts start small, but they grow quickly, faster than inflation, and that's what makes it slightly faster than the S&P 500. So let's bring it all together. What would $100,000 in FZROX look like over the long term? After the first year, John's portfolio will be valued at around $113,930. After 10 years, it's projected to grow to $361,701. By the 20-year mark, that balance will reach around $1,270,201, and after 30 years, John's portfolio will be worth roughly $4,385,315. That's about $4.28 million in total value added, with roughly $4.18 million coming from capital appreciation and $101,858 from reinvested dividends. By the 30th year, John's annual dividend income will be around $7,797. That's more than triple the dividend income of FXAIX and $300,000 extra in terms of value added. Absolutely solid return on capital. But there are even better options ahead, including a fund that pays over $20,000 in monthly dividend income. And at the end, I'll show you the index fund that can turn a $100,000 investment into almost $10 million over the long run. Next, at number 3, we have the Fidelity Mid-Cap Index Fund, FSMDX. This fund focuses on companies right in the middle, not the huge household names like Apple or Microsoft, but not the tiny startups either. These are businesses that have already proven themselves, yet still have plenty of room to grow. Think of it as the sweet spot. It's a segment that often delivers the best of both worlds, the stability of established businesses and the growth potential of rising stars. Historically, mid-cap stocks have outperformed both small and large caps over long stretches of time, but they rarely get the spotlight. That's what makes this fund so interesting. FSMDX holds around 816 stocks across major sectors like industrials, financials, and technology. The top 10 holdings make up just 5.61% of the fund, meaning no single company dominates. That kind of diversification helps smooth out returns when markets get bumpy. Inside the fund, you'll find names like Royal Caribbean, Robinhood, Bank of New York Mellon, Roblox, Howmet Aerospace, Cloudflare, and Hilton Hotels. Companies that may not make daily headlines, but continue to grow and reward patient investors. Its expense ratio is only 0.03%, keeping it one of the most affordable mid-cap options available. With about $45 billion in assets, it's large enough for easy trading but small enough to stay nimble compared to massive index funds. The share price sits near $37.47, and over the past 5 years, FSMDX has returned about plus 59.24%. That's slower than the tech-heavy large-cap funds, but this one makes up for it in other ways, particularly through stronger dividends. The dividend yield sits around 2.28%, which is noticeably higher than most broad market index funds. Even better, its dividend growth rate over the past decade has averaged a solid 13.75% per year. That means your payouts grow fast, and when they're reinvested, they become a powerful compounding force. Combine that with an average 9.98% annual share price appreciation, and FSMDX offers a great mix of income and growth potential. So what happens when John invests $100,000 into FSMDX and lets it grow? After the first year, John's portfolio will sit around $112,260, a solid start for just letting time do the work. Fast forward to 10 years, and it's projected to climb to roughly $330,200. 2 decades in, that balance will grow to about $1,213,483 as compounding really starts to kick in. And by year 30, his original $100,000 will be worth nearly $5,196,450. That's over $5.09 million in total value added, with about $3.3 million from capital appreciation and $1.79 million from reinvested dividends. And here's what makes FSMDX stand out. Those dividends really matter. By the 30th year, this fund will pay around $297,061 per year, or roughly $24,755 per month in dividend income. Next up, at number 2, we have the Fidelity U.S. Sustainability Index Fund, also known by the ticker symbol FITLX. This fund is designed for investors who want to align their money with their values. It invests in companies that lead responsibly, businesses that meet high standards for environmental, social, and governance practices. But that doesn't mean they ignore growth. In fact, most of the companies that check all these boxes are giants in their sectors. The fund holds around 277 companies carefully selected to represent the best of sustainable American businesses. Its top 10 holdings make up about 51.87% of the fund and include innovators like NVIDIA, Microsoft, Alphabet, Tesla, Visa, MasterCard, and Eli Lilly, all names driving growth through both impact and profitability. FitLX takes a focused approach. It leans into sectors positioned for long-term strength: clean energy, advanced technology, healthcare innovation, and digital infrastructure. Performance-wise, its expense ratio of 0.11% is slightly higher than a standard index fund, but still remarkably low for an ESG portfolio. That small cost provides access to one of the most efficiently managed sustainability strategies available, and it's performed well. Really well, in fact. Over the past 5 years, FitLX has returned about plus 104.63%, outperforming many traditional index funds. The share price sits around $30.06 and continues to climb steadily, powered by its strong exposure to technology and healthcare, two sectors leading both financial and social change. Sustainability funds often get labeled as feel-good but low-return investments, yet FitLX completely breaks that stereotype. It proves that doing good and doing well can absolutely go hand in hand. The global shift toward clean energy, digital transformation, and responsible business isn't slowing down, it's accelerating. And this fund sits at the center of that movement. From an income standpoint, FitLX offers a modest 1.11% dividend yield, but the magic is in the growth. Over the past decade, its dividends have increased by a strong 13.74% per year, far outpacing inflation. Combine that with an average 14.81% annual share price appreciation, and you've got a fund that delivers both financial performance and long-term impact. So what happens when John invests $100,000 into FitLX and simply lets it ride? Well, after the first year, his portfolio is projected to be around $115,920. A decade in, it's projected to reach about $436,151. After 20 years, that balance will grow to roughly $1,884,634, and by year 30, John's investment will be valued at an incredible $8,075,698. That's roughly $7.97 million in total value added, with about $7.53 million coming from capital appreciation and $441,727 from reinvested dividends. By the 30th year, John's yearly dividend income will be around $57,751, or roughly $4,729 per month. FitLX shows that investing with purpose doesn't mean sacrificing performance. And while this fund thrives on responsibility and innovation, there's still one more that takes things to the extreme: a fund built entirely on disruption, technology, and pure growth. So let's see what happens when John's $100,000 meets the powerhouse of the tech world, the Fidelity NASDAQ Composite Index Fund, FNCMX. This fund isn't built for safety or predictability. It's built simply for growth. When you invest in FNCMX, you're buying into the heart of technological progress, the companies creating the products, platforms, and systems that shape the way we live, work, and connect. This fund tracks the NASDAQ Composite Index, which includes more than 2,800 companies, a lineup dominated by the world's most influential disruptors. You might see some of the same names as in the other funds, but this fund's top 10 holdings make up about 59.25% of the portfolio, giving it a very strong focus on the biggest tech giants driving modern markets forward. It's a high-conviction fund, and that's what gives it power. With an expense ratio of 0.29%, it costs a bit more than your average index fund, but that extra cost buys you a front-row seat to the fastest-growing part of the economy. Over the past 5 years, it's returned about plus 107.48%, more than doubling investors' money in just half a decade. And if you look at the 10-year chart, it's up by more than 350%. That performance doesn't come without volatility, though. The share price, currently around $292.24, moves with intensity, sharp swings in both directions. But over time, the upward trend has been undeniable. And that's the trade-off here. High reward, high risk. Because FNCMX is heavily concentrated in technology, it tends to soar during bull markets and take harder hits when the economy slows down. Its short-term moves are far sharper than funds like FXAIX or FZROX, but that volatility is the price you pay for the kind of long-term compounding that this fund can deliver. From an income standpoint, FNCMX isn't about big dividends, and that's okay. It offers a modest 0.51% dividend yield, and over the past decade, its dividend growth rate has averaged negative 4.88%. Not exactly exciting on paper, but that's because most of the companies inside this index don't pay much in dividends at all. Instead, they reinvest their profits into research, expansion, and innovation. That's what drives its incredible 16.48% annual share price appreciation, fueling long-term growth over short-term income. So what'll happen when John invests $100,000 into FNCMX? After the first year, John's balance will come in around $116,990. 10 years down the road, that same investment is projected to reach roughly $468,382. By the 20-year mark, compounding will have done most of the heavy lifting, pushing the portfolio to about $2,156,978. And 3 decades in, John's original $100,000 will have grown to an incredible $9,918,036, nearly $10 million built on time, patience, and innovation. That's about $9.82 million in total gains, with the majority of it, about $9.81 million, coming purely from capital appreciation and a small $5,700 boost from reinvested dividends. FNCMX isn't built for comfort. It's bold, fast, and driven by innovation. But for those who trust in technology and stay patient, it can turn time and conviction into extraordinary growth. Want to know how to make $4,000 a month with only a $12 weekly investment? Click the video on the screen to find out.